company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. We are minutes away from the latest earnings out of Advanced Micro Devices. AMD among the names reporting after the close of trading. Investor focus will be on its new artificial intelligence accelerator chip, seen as the firm's best hope of competing with NVIDIA's H100, which helped turn that company into the first trillion-dollar semiconductor maker. AMD shares ahead of its earnings report trading higher now. We've got AMD up by just about 2.2%. Pfizer CEO 2024 will not be a major year for M&A activity for his company. Pfizer's sales missed expectations for the quarter as its COVID-19 shot and pill continued to create instability for the drug maker's efforts to transition out of the pandemic. Borla spoke this afternoon with Bloomberg's David Weston, and in that interview, he talked about a post-COVID Pfizer.
Because still COVID, I think, will be around and will be a significant part of our revenues, but will not be the epicenter of everything we do. I think the epicenter moves to the acquisition of Seagen, so moves to cancer. We are putting a lot of capital over there, and we are hoping that we will be able to make a big difference on cancer, as we did with COVID.
And Pfizer shares, they're higher by 0.1%. One of today's big gainers, Pinterest, after earnings. Pinterest shares, they are surging now by 18.7%. The company reported third quarter results that beat expectations. And those are some of the top company stories at this hour. I'm Charlie Pelletin. This is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, just under 5 minutes left in today's trading session, getting ready to wrap up the month of October, this Halloween day of trading, trick or treat. I feel like it's kind of neither, don't you think?
It definitely feels that way as far as looking at the positioning heading into tomorrow, because we know it's today's day one of the Fed decision, but I mean, really, it's not even... We're not going to have the dot plots, the quarterly projections.
Halloween candy at the Fed meeting.
I know, and apparently, I don't know if you saw this story on the terminal yesterday, but talking about how Halloween costs are a lot higher.
Did. It's expensive. Cocoa and sugar. They've gone up a lot.
Yeah, the USDA is saying the cost of sugar and sweets surging more than 9% this year. So I'm going to wait till tomorrow, Carol, and get those all discounted.
It's really funny. Unfortunately, you can't save till next year because
that's where I'm going to be tomorrow.
All right, we're going to shift gears a little bit. Well, actually, we talked about Tesla, we talked about it a little bit earlier.
Yes.
Did we not talk about it a little bit earlier?
We did.
We did. But Tesla convinced a jury that its autopilot technology was not responsible for a crash that killed a California driver 4 years ago. So vindicating the driver assistance system that really is a core part of what Elon Musk is doing with Tesla and his efforts to make his electric car company really stand out from rivals. But we did it with the context of Tesla has been a stock that's really under a lot of pressure. I think we mentioned it at the top of the show.
Even over the last 5 trading sessions, it's down about 7%. I mean, given that its stock at one point was up over 100% this year, but now it's still up about 85%, but it's really eaten into those annual gains just given the declines we've seen in recent weeks.
Well, there's been so many concerns. I feel like the narrative around the electric vehicle market, especially here in the United States, has really kind of downshifted, if you will, and that it's, you know, we were talking about tipping points, I feel like, earlier in the year, but now it seems like maybe they're not selling as much, and we're seeing, you know, kind of not as much of a focus, it feels like. And we've certainly seen demand for electric cars starting to weaken, and that has certainly played into Tesla's valuation. I think about $140 billion in valuation has been wiped out, so about a fifth of their value in roughly 2 weeks, or a little bit less than that. So it's interesting, but this was a win for Tesla, and we do see, as you mentioned earlier, Tesla shares are up in today's session.
And looking at those federal probes, and especially questioning the safety regarding a lot of this. So still that autopilot has contributed to at least 17 deaths since June 2021.
All right, folks, we're over to our TV colleagues. We're talking the markets. Countdown and Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, Katie Greifeld and Scarlett Fu, we are counting you down to the closing bell, and here to help take us Beyond the Bell. We have a global simulcast, joined now by Carol Masser and Jess Menton, in, of course, for Tim Stenovic. And we bring together our Bloomberg television, radio, and YouTube audiences to parse through this trading day, Carol. And it's an up day, but as we've been talking about, a third straight month of declines.
Yeah, right. The longer trend line is really significant. And here we are less than 24 hours away from that next Fed decision. So it does feel like this is kind of a day we're just kind of waiting to see what we get in terms of color commentary from the Fed. Having said that, home builders are up almost 2% in today's session. This is U.S. home prices set a new record with a seventh month, I should say, streak of gains in terms of prices, Jess. So that certainly is an outperformer in today's session.
Yeah, and this would be the longest losing streak for the S&P 500 since the onset of the pandemic in 2020. But I would want to point out the S&P 500, I mean, it's trading around 41.95 right now. Actually, its one-year average is around 41.74, and that was a key level that technicians were watching to see if the S&P 500 could end up recapturing above that. So that is an optimistic sign going into November.
And of course, we're still in earnings season. It does feel like the bulk of it has passed us by, and it probably will be that way after Apple reports on Thursday. But before we get there, we do have AMD, which of course is seen as like the next chip maker that can really jump on this AI bandwagon following NVIDIA at this point.
And AMD, I mean, you think about the year-to-date gains that they're sitting on, it's pretty significant, but we'll see what actually happens after the bell when they report earnings. As we count down, you know, we have, what, 7 seconds left. It's going to be an up day. The S&P 500 finishing about 0.6% higher. The NASDAQ about 0.5% higher. The Dow also getting in on the action, up about 0.4%. So small moves, Carol, you know, in the grand scheme of things, but still a positive day.
Yeah, the bulls will take it, right? Whatever they can get right now. Having said that, the S&P 500, you've got most names, Scarlett, in the index higher today, 412 to be exact, 89 to the downside. You look at the NASDAQ 100, 80 names are moving higher in today's session, 21 losing a little bit of ground here.
Yeah, we're seeing some market breadth, right?
Yeah.
You look at the breakdown in the S&P 500's 24 industry groups, and even though you only have a gain of about 2/3 of 1%, all 24 groups are in the green. Media entertainment, basically little changed. Real estate investment trust at the other end, up by almost 2%.
All right, so let's get to some individual gainers as we wait for some of those earnings to cross the Bloomberg. GE Healthcare Technologies, remember they were spun out from parent GE earlier this year. This stock really soaring in today's session, up about 5.4% off its highs of the day, but nonetheless an outperformer, number one gainer in the NASDAQ 100. An earnings beat, and it boosted the lower end of its profit guidance for the full year. It's up about 12% so far this year. Arista Networks, it's a networking communications company. It was also among the outperformers, hitting an all-time high, up 14% in today's session. Reported after the close last night, fourth quarter adjusted EPS and revenue beat estimates. Morgan Stanley then coming out, upgrading the stock to overweight, and they also raised their price target to $220 a share from $185, and the stock you can see closing at about 200 and change today. One more, Dexcom. I talk about it a lot because it keeps popping up among the most performers and best performers in the NASDAQ 100, and often also, I believe, in the S&P as well. But number two gainer in the NASDAQ 100, they make glucose monitoring systems. They've been killed and were smacked down essentially from about mid-July to mid-October. They dropped about 45%. It's rallied about 16% since that time. This basically is analysts saying maybe it's overdone. They're concerns about those new class of weight class drugs, concerns that it would cut into their business, but nonetheless, it continues, you guys, to see their bounce back.
Looking over at the decliners today, have to start off with JetBlue dropping more than 10%. So this is its worst day since June 13th of 2022. Of course, that company did miss Wall Street expectations when you are looking at those earnings estimates, and it did forecast a worse than expected loss this quarter. So it is facing different constraints when it does come to its operations, and from air traffic control limits, apparently. Too many seats for sale across the industry. So we're going to see how that impacts, obviously, holiday travel coming up here soon. Another one I want to point out, Caterpillar, especially a barometer when you are thinking about what this means for the global economy. That stock down almost 7%. So this was its worst day since April of last year. So the machinery maker did report a sequential decline in its order backlog. So that does cause concern for what that could mean in the months ahead and if things are beginning to slow there. And then, of course, Catalent, this is among the biggest, actually decliners, the second biggest decliner in the S&P 500 today, down almost 14%, so its worst day since May 8th of this year. So really it had to do with the deal with another pharmaceutical company, but looking at this basically being a third-party filler here, it did tumble, and it was in an agreement with another company for supply agreements in January for manufacturing. When it comes to as actually looking at muscular dystrophy here between the ages of 4 and 7, but it did not meet its primary endpoint with the company it was working at, so you are seeing that stock getting pummeled today.
All right, let's take a quick look at the bond market. Of course, the big action is tomorrow, 8:30 a.m. We have that Treasury refunding announcement, and then 2 p.m. we get that Fed decision. If you take a look at the yield moves today, they look small. That actually masks a lot of intraday drama, particularly on the 10-year yield. It's only about 2 basis points higher right now, but at one point today, we were as low as 480, so a 10 basis point intraday swing. You take a look at the 2-year yield, only up about 1 basis point, small moves across the curve as well. But guys, we know that the big events for this market come tomorrow. It really feels like a holding pattern, especially when you think about the fact that we haven't really had any Fed speak to speak of in this quiet period.
Yeah, right. It really does feel kind of in a weird momentum or lack thereof, if you will, as we wait for some more information from Jay Powell and company. Real quick check on First Solar. Should we do that?
Yeah,
let's do it. All right, First Solar coming out with their third quarter results. Net sales, $801 million. That's a big miss. $877.2 million was the forecast. Third quarter EPS, $2.50 a share. That's a big beat. The estimate was for $2.03 a share. As for the outlook, the company still sees fiscal year gross margin of $1.2 billion to 1.3. Still sees fiscal year net sales of $3.4 to 3.6 billion. The estimate out there is $3.49 billion. And operating income for the fiscal year, they're talking about $770 million to 870 million. That's a little bit of a bump up. They had seen 745 million to 870 million. There were some worries. Solar Edge had done some warnings, so there was a little worry about that. But Solar, investors not liking it. Down about 2.4% here.
All right, let's also take a look at Caesars Entertainment, which reported earnings as well. EPS of 34 cents, beating the consensus estimate by a nickel. Same store adjusted EBITDA, $1.04 billion. Analysts were looking for $1.01 billion. And when it comes to net revenue, $2.99 billion, slightly higher than what analysts were anticipating, which was $2.93 billion. Caesars, of course, is much more domestically focused. It doesn't have that exposure to Macau like the other big casinos like Wynn or Las Vegas Sands, despite that company's name. So you're really looking at the spending patterns of visitors to the U.S. and Americans when it comes to Caesars.
And we know everybody's going to Europe, or have been, so they don't benefit.
Maybe not anymore.
Not anymore, right?
But also looking ahead to Advanced Micro Devices, waiting on those earnings reports, and especially with investors' focus being on that new AI accelerator chip. So it has been seen as the firm's basically its best hope for competing with, of course, NVIDIA's different chip maker, and especially when you're looking at the H100 there and what that could potentially mean for being competitive in that sort of space.
Yeah, this is an interesting moment for AMD. And of course, we also have Qualcomm reporting tomorrow. We get AMD in a couple of minutes, but that's really the tale of two chip giants there, because AMD, it's up something like 50% year to date. Can't say the same for Qualcomm. Pretty close to a little changed on the year. But you think about this real sort of arms race between these chip makers. Obviously, AMD has managed to maybe have a shot at taking some share, but this has really been such a story about NVIDIA this year.
Right. People, fingers crossed, right, that in terms of the PC industry, that maybe we start to see some follow through there. But it really is about AI chips, Scarlett. We continue to, even though we've kind of backed off, I feel like a little bit, this earnings cycle in terms of going through the press releases and looking for everybody to mention AI. We know that this is a big part of everyone's business going forward, and they're all going to need chips to kind of get to that point.
Yeah, although for AMD, the AI story is really more about 2024 in terms of concrete numbers. But I think about what the exciting theme is for this quarter, this earnings season. It's all about Ozempic. It's kind of replaced AI. What did you say it was, Katie?
It was the AI moment for healthcare.
There you go.
Is these weight loss drugs.
The things we talk about in between the show, right?
Chit-chatting, yeah.
During the breaks.
It's fascinating, but you're absolutely right. It feels like everybody does. I'm looking at AMD, still waiting for their earnings to come out. But of course, as soon as they cross, I know you guys will be all over it, as we will as well. All right. I believe that's a wrap. This cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals. A little bit of earnings, but you can tell from us, we're all kind of waiting for Jay Powell and company and that decision tomorrow.
Happy Halloween, by the way.
Happy Halloween. All right, we'll see you again tomorrow. All right, as we continue to await AMD earnings, we got earnings from Caterpillar earlier today. It's a company closely watched as a gauge on the economy, and shares of CAT did tumble, I believe, to the lowest level since early June after the company said its order backlog shrank in the third quarter. It's a sign that the market sees as a slowing demand for really the equipment that it provides for so many, and potentially a slowdown in the coming months. So let's get to it. It's a stock and company story, certainly on this Tuesday. With us is Bloomberg News Metals and Ag America's Deputy Team Leader, Joe Doe. He is on Zoom from New York City and has been all over Bloomberg's universe covering it. So, Joe, first of all, it took a big hit. What we need to know from their release and from their outlook?
Yeah, I mean, if you just look at the release, they had a great third quarter. Construction was up, which nobody expected. I think most people were expecting weak construction because, I mean, face it, look at the economy right now. Everybody's talking about construction not being in the best place. But yeah, what really hit them was the order backlog. We saw the order backlog quarter over quarter, so third quarter this year versus third quarter last year, dropped by $1.9 billion. And I think that was much larger than most people were expecting. And it's the first time that they've actually seen a drop quarter over quarter like that in the order backlog since third quarter of 2020. So we're talking about the last time they saw something like this. We were in the middle of the pandemic. They were right in the middle of all the problems that they were facing because of the shutdowns globally from COVID.
That's the second company, JetBlue and this one, right, that is hearkening us back in terms of the kind of feel like share price drop or some of the news around it, hearkening us back to the pandemic, the early days of the pandemic.
Right, and then also earnings being the catalyst for a lot of these stock declines, whereas macro had been driving a lot of things coming into earnings season. So, Joe, when you're talking about these order backlogs, explain to our audience, especially when we talk about Caterpillar being a barometer for the global economy, is this a sign that it's indicating customer demand is beginning to slow, or is going to actually slow in the coming months?
Yeah, that's the worry, right? Because the order backlog is effectively telling you, how the months ahead, what do customers actually need, right? And so the concern is, well, maybe customers don't need as many machines in the few months ahead of us going to 2024 as originally expected. And what it always comes down to for Caterpillar, a big company like this, is have we reached the peak, right? That's what investors keep asking. Did we reach the peak of the cycle? And today, the sell-off suggests that a lot of people are worried that, yes, we've reached the peak and demand is going down, and it's going to continue to go down for a little bit. However, management did get on the call, and they said, to your point about hearing all these earnings calls that are harking back to the pandemic, listen, guys, we're normalizing again. We're starting to see that backlog get back to normal. We're not seeing the same supply chain hangups that we did even 3 quarters ago. We're not seeing the long lead times. And putting it in plain English, they were saying customers who need machines aren't as worried about getting them on time that they were a year ago or 2 years ago. So that's the kind of counterbalance here is, maybe it seems like the sky is falling, but at the same time, management said, we were expecting this.
So normal? Glass half full, glass half empty? Like, what's the takeaway then? Investors certainly ran for cover today.
Yeah, investors ran for cover, and I think it was the number, right? Okay. Many analysts were saying you're probably going to see the order backlogs look not so good. You're going to see the inventories look not so good, and that's probably going to spook investors. And guess what? That's exactly what happened today. But I think it was the number being so big, $1.9 billion, right? That is just not the kind of number that we're looking at. Typically, we've been looking at $1.9 billion or more on the upside, right, in terms of an increase of the backlog. So I think it was the size of the number that really spooked people, making them think, could be time to take a little bit off the table here. But unfortunately, as is the case, having covered this company for so many years, we're going to have to see how this kind of plays out over the next few days and few weeks. Management usually comes out a few weeks after earnings and go to one of the conferences, and they have follow-up commentary on what they're seeing in the market. I think those are the type of things that the macro investors are going to look really closely at with Caterpillar.
Are you seeing this happening more broadly within other companies in that particular segment of the stock market?
Well, we're definitely seeing, I mean, at least in the industrial side, there's a big concern about peak, right? There's big concerns for AGCO, which is a farm machinery company, and John Deere, which everybody knows of, are we starting to get near that peak? And I think that's the question that just keeps coming up. I know in the steel industry and the aluminum industry, demand has been kind of sideways. And sideways, those are the kind of words that really start to spook the investors, right? They say, okay, so we've had a great couple of years here. Prices went through the roof for commodities. Construction sites were full. Now you start saying things, growth is decelerating. And that's when you start to see the big sell-offs. At least right now, I don't think anyone's heading for the hills. I think that would be unfair to say that we need to panic, that the economy is suddenly shutting down. But everybody's always looking for some of the cracks. And frankly, after all these earnings between the metal commodity companies and the machinery companies, it's just looked okay. And okay is not the kind of thing that gets people excited.
No, exactly. We want more. We want more. AGCO, by the way, their CEO is going to join us live on air tomorrow, and their shares were up almost 2.2% following their earnings. So, Joe, what is it that my co-host Tim Stanovic says? When in doubt, step out. So your space, I love it, because you do see so much, and it does give us a good snapshot globally too, right, of what's going on in the world. But when you specifically think about the American economy, what does it show you when you look at the companies that are reporting and just the general news flow in your world?
Yeah, I think I can dumb it down to interest rates.
Okay.
Right. When you're talking,
it all goes back to interest rates. But go ahead.
It really does. It really does. When you're talking to contractors in this space, right? They're building stuff. They're building buildings and houses. It is getting to the point now where it just costs a lot for everything, right? And so we had heard months back, back in the spring, that a number of shovel-ready projects, private projects, were being put on hold because people just said, interest rates are getting too high, borrowing costs are too much for us, and we're just going to put things on hold for now. And I think that's where we're at, especially talking to various steel service center in the space, various traders who buy and sell aluminum and copper. They just keep saying, listen, our customers are coming to us and saying that their lenders, right, the banks, are coming to them saying, well, a lot of the terms that we had on our deals are going to have to change. I mean, it's like one of the things I've said internally to to our eco team and everything else is if you were getting 90-day terms, right, a year and a half ago, now to get the same type of terms, you're going to have to pay twice as much, right? And so it's just kind of insanity, and everybody's trying to figure out the financing.
Well, you help us figure it out as well, so appreciate it. Joe Doe, Bloomberg News Metals and Ag America's Deputy Team Leader, joining us on Zoom in New York City. We are in the midst of earnings. AMD just crossing. The stock is down about 5% in the aftermarket. So let's get to some of the numbers. Third quarter revenue, $5.8 billion. The estimate was $5.7. Third quarter adjusted operating income, $1.28 billion. That's a little bit higher. The estimate was $1.27 billion. And it's talking about the fourth quarter, the outlook. Company AMD sees fourth quarter revenue about $6.1 billion plus or minus $300 million. Sees fourth quarter revenue to be about $6.1 billion again, plus or minus $300 million. And fourth quarter adjusted gross margin, again, this is the outlook, about 51.5%, a little bit light. The estimate was for 52.1%. Looking for more of that color, if you will. The company says it sees added softening of demand in the embedded markets in the fourth quarter. And Jess, we've got the stock down about 4% in the aftermarket.
That options implied volatility move for one day there was around 6.8% on this. So it's interesting seeing where it is bouncing around after hours, now down still about 3%. And then also looking at the data center revenue, it was estimated to come in it actually came in at $1.6 billion. The estimate was actually for 1.62, so just shy of that, Carol.
Yeah, I'm just looking at the press release. The company's chair and CEO talking about, actually this is the CFO, we executed well in the third quarter, delivering year-over-year growth in revenue, gross margin, and earnings per share. In the fourth quarter, we expect to see strong growth in data center and continued momentum in client, partially offset by lower sales in the gaming segment and additional softening of demand in the embedded markets. But what's catching investor attention is that the company sees fourth quarter revenue $5.8 billion to $6.4 billion. The estimate is $6.4 billion, so it's giving a lower range there, and that that is certainly maybe creating some nervousness in the aftermarket. We're looking for some commentary on that AI chip. We'll go through the press release, continue to do so. But right now we're looking at AMD shares, which have been on a tear this year, down about 3.5%.
headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. AMD's numbers are out, and the stock is trading lower after hours. Advanced Micro Devices down now by 4.2%. AMD guiding lower. It sees fourth quarter revenue in the range of $5.8 to $6.4 billion. Estimates on AMD have been for $6.4 billion. Again, after hours, AMD trading lower now by 4.5%. It is on to the trading month of November. Can you believe it? Where has this year gone? We've got the S&P at 41.93 as we wrap up the trading month of October. Losing month, S&P up 27 points today, up by about 0.7%. Wall Street's jittery month ended with the S&P rising but still notching its longest monthly slide since the onset of the pandemic. The Dow up 123 points today, up by about 1.4%, and the Nasdaq Composite Index was up 62 points today, higher by about 0.5%. 10-year yield 4.91%, with a 2-year that's yielding 5.07%. Spot gold down $12 the ounce now to $19.83, down by about 0.6%. West Texas Intermediate crude down 1.2%, $81.32 a barrel. Briefly, Zillow Group and other real estate stocks plunged after a Missouri jury found the National Association of Realtors and other industry players guilty of colluding to maintain high brokerage commissions. Zillow today down by 7%. One more check of AMD after hours. Advanced Micro Devices after earnings down 4.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie covering so much of it, including AMD, which is down, continues to be down about 4% in the aftermarket following its earnings. By the way, their chips have been used in the automotive world as well as Tesla's. So we want to talk about AMD, we want to talk about Tesla, and we also want to talk about another EV maker, car maker, Stellantis. I'm trying to roll it all together. And I'm going to toss it over to our Ed Ludlow, who is co-host of Bloomberg Technology on Bloomberg TV, because I'm going to throw it all at you. But let's start with AMD. I know there's a lot on your plate. This is our weekly look at the world of EVs. We call it Bloomberg Plugged In. But let's start with AMD, which is down in the aftermarket. What jumps out for you, Ed?
Yeah, it's just a mixture of disappointment, right? If you go to their forecast for the fourth quarter, the revenue range is $5.8 to $6.4 billion. The street wanted to see $6.4 billion, so the mid-range point is kind of disappointing. But the biggest story here is that they're not seeing the PC recovery that Intel saw. They make GPUs that go into gaming consoles and high-end gaming PCs and are warning us that's slowing down. And even though they told us that their super special AI accelerated chips, MI300, are on track to go into production and ship in the final 3 months of this year, there's kind of no tangible boost from that, right? It's not going to book as substantive revenue until the beginning of next year, and it will take them time to catch up with NVIDIA and the H100. So it's a bit of a mixed bag, which is never really what you want in earnings, but the market's a little disappointed.
And shares of AMD were actually up more than 50% heading into this report. How much of this also, when you have another stock that may have gotten ahead of itself after last year's sell-off in chip names, does this make sense for some investors?
Well, this is part of the story. You know, the data center business was a disappointment last quarter, a missed estimate. So they have a data center business that isn't yet reflecting the opportunity of AI. They're the number 2 PC processor maker behind Intel. And Intel gave us really promising glimpse that maybe that market is recovering. And when all told is at the end of 2023, shipments will look better when we get them. AMD's results don't really reflect that. And as I said, we're excited about the MI300 AI accelerator, but it's some way off still, showing up in the financial results.
Yeah, it's pretty fascinating. If you were sitting down with the CEO, what would you ask him? Or ask? Yeah.
Well, Lisa Su.
That's
I think
I'd
ask. Yeah, I'd ask, what evidence do you have that you can continue at such a click that the MI300 will gain traction in the market that the H100 did? You know, all of the CEOs of these chip companies say that we're just at the very beginning of this AI thing. There's going to be demand for all kinds of chips, all kinds of GPUs. Well, if that's the case, give me some data, what the next 12 months looks like and how many of these you think you'll sell, and most importantly, to who.
Yeah, it's interesting, too, to go down the revenue line. If you look at our DES page, right? Like, I mean, gaming is important. Client, area is important. Data centers are important. I mean, you're talking about, over $6 billion revenue for each of those. So these are areas that they really want to be kind of, firing on all cylinders, if you will, correct? And you kind of get this mixed bag.
And it's in the history of both AMD and NVIDIA. The GPU, graphics processing unit, has its origins in video games.
Right.
It's a chip that can handle lots of parallel data processes. That makes it great for AI. So NVIDIA translated that to the AI use case. AMD is seeing it can. We just haven't got any proof that it's done it yet.
I wanted to switch gears and ask you, of course, about Tesla, because the valuation and just seeing how much it shaved in billions because of some of these demand issues. How does this sort of play into that when we are talking about chip makers and then obviously what this means for the EV space?
Do you guys ever just wake up and think about monetary policy and rates?
Yes.
I do.
I do too.
And Elon Musk is talking a lot about interest rates. And why does the Fed use rates as a mechanism to control inflation? Higher rates tamper demand in the economy. That's literally the mechanics of what they're trying to do. And we're seeing that play out now in the car industry. In the EV context, the early adopters have been and gone. They've bought their EVs. Now it's the rest of Americans who face all kinds of household spending pressures. And there is evidence that EVs are kind of a victim of that. Earlier in the year, Tesla used price cuts to unlock new pockets of demand. And the narrative since October 18th is Tesla's shares are down almost 20%. They've shed billions of market cap because we're starting to question the demand that's actually there and the severity of the impact of rates.
I mean, is it though all across the EV space? I mean, we've had a lot of conversations, Ed, right, around this. And we thought, we're getting to this tipping point in terms of EV adoption, certainly throughout the world, but maybe getting closer to it here in the U.S. What's happened?
Well, the other evidence that we point to is that the legacy automakers, for example, General Motors, that are managing a transition from combustion engine to EV, have also tempered back their EV expectations. A part of that, of course, is the impact of the UAW strikes and sort of business continuity and operations. But a part of it is a rethink on demand and, rethinking how much or how many EVs they're going to have to build and how quickly to meet what is a lessening demand picture.
But you have then Stellantis out, right? And their shares rallied better than expected revenue in the third quarter. And they talked about robust demand for their electric Jeep Avenger. And
this is the beautiful story for a global news network like us. Because Stellantis has this whole thing on a place called Europe.
Yeah.
And in Europe, it's a completely different market where smaller form factor vehicles at lower price points are doing really well. Brands that you have not heard of, like Citroën, have done well in that market, and there are models of Jeep that Stellantis make in Europe that we don't even have here in the US yet. And so Stellantis is an interesting one because it was late to the EV party, but its strategy is working in that continent, and that insulated them somewhat from the North America story, where actually their pricing power on combustion engines was better anyway, and that helped offset some of the UAW disruption.
What hurts them when it comes to some of their U.S. counterparts and rivals?
What did you say? Sorry, I lost you in my ear. U.S. counterparts and rivals.
For Stellantis, as far as when it does have the ability to be more unscathed, obviously, in Europe, but when it comes to the U.S., sort of the dynamic where it has had other issues trying to catch up with maybe some of its rivals?
Yeah, it's a really good question because Stellantis, under its different brands in this country, principally Jeep, Chrysler, Ram, does not have a sort of high volume selling EV model. There are two parts to it. If you take the pickup market, there's extreme brand loyalty here. So it's fair to assume that when we get an electric Ram, that will resonate with a sort of loyal Ram audience. But in the consumer EV domain, it's getting very competitive. You not just have Tesla, but other pure play names like Rivian, and Ford and GM moved quicker to bring battery electric pickups and SUVs to a country that loves those bigger form factor cars. Stellantis is late, but they're coming. End of this year, beginning of 2024. How much traction they gain will be really interesting to track.
It makes me wonder, coming off of all of these deals with the UAW, the big three here in the U.S., obviously Stellantis included, of course, in that, whether or not they're going to be able to stick to their EV missions. I just wonder about the cost side of things, Ed.
So what Stellantis said is that the UAW strikes cost them about $3 billion of sales revenue. But on the bottom line, the impact was much more muted, about $800 million of impact, because they were able to control their own cost discipline. And that's kind of been a feature of the Stellantis story. But it also delays. They canceled their CES showcase, for example. And part of selling EVs to consumers is getting out there, talking them up. So it has had a sort of long-term strategic impact.
All right, I just want to know, when you wake up, do you really think about the Fed monetary policy, or is it about what Elon had to say? Come on.
I really mean it, because partly, like, if you want to buy a house or a car, those are the two most important decisions you make.
Look at all the
and
surveys.
Rates matter.
Right, all the surveys we've been doing here at Bloomberg. It's top of mind for everyone. Everybody's feeling the pinch in it. Ed Ludlow, thank you so much. An incredible roundup of a lot of different stories, but tying it all together and finding that common thread. Ed, of course, is co-host of Bloomberg Technology on Bloomberg TV. Catch him and Caroline Hyde every day, noon, Wall Street time on Bloomberg Television. And our thanks for him tying it all together in Bloomberg Plugged In. There's a lot going on in that world.
MI300 for AMD. That's the chip that's supposed to compete with NVIDIA's.
Yeah, not impressed. I'm just telling you, the stock's still down about 4.5%. It's that fourth quarter revenue outlook really disappointing, I guess, to investors.
Now let's get a check on the latest world and national news with Nancy Lyons in our Washington, D.C. newsroom.
Thanks, Jess. The U.S. will be sending over Jack Lew as the new ambassador to Israel. He was confirmed by the Senate today, with Democratic Senator Ben Cardin expressing his support and saying the Israelis also back Lew for the job.
They are very much looking forward to having a confirmed ambassador from the United States in Jerusalem to help in regards to the challenges they're now facing as a result of Hamas's terrorist attack in Israel. And they're very much looking forward to Jack Lew being that ambassador.
Republican Senator Jim Risch criticized Lew for his role in the Obama White House when it negotiated the Iran nuclear agreement.
This is the wrong person at the wrong time in the wrong place.
Lew was confirmed by a vote of 53 to 43. President Biden's two top foreign policy lieutenants, Secretary of State Blinken and Defense Secretary Austin, testified today before a Senate panel and pushed for approval of the latest emergency funding request from the administration, seeking $106 billion to support Israel, Ukraine, and other security priorities. Blinken says the money is desperately needed to protect U.S. interests.
The President's request would secure the urgent resources that we need to continue to lead. Secretary Austin and I believed it important for us to be here together today because in this mission, as in so much that we do to advance America's national security, our defense, our diplomacy, our development must work hand in hand.
Blinken's testimony was interrupted numerous times by protesters who support Palestinians in Gaza.
Ceasefire now! Save the children of Gaza!
Egypt says it will open the Rafah border crossing tomorrow to let some wounded Palestinians leave. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street with you. Check markets all day long here at Bloomberg. WeWork plans to file for bankruptcy as early as next week. That according to the Wall Street Journal. We're keeping an eye on Advanced Micro Devices after ours. AMD now down by 4.5%. AMD is Intel's main rival in computer processors. And after the bell, it gave a lackluster revenue forecast for the current period, warning that demand for gaming machines is slowing again after ours. We do have AMD down now by about 4.5%. It is on to the trading month of November. Wall Street's jittery October ended with the S&P rising today, but still notching its longest monthly slide since the onset of the pandemic. Today, the S&P was up 27, a gain of 0.6%. Dow Jones Industrial Average up 123 points today for the Dow. That was a gain of just about 0.4%. NASDAQ, the composite index, up 61 points, up by about 0.5%. 10-year yield 4.91% with a 2-year 5.08%. Gold down $12 the ounce. Spot gold at $19.84 the ounce, down 0.6%. West Texas Intermediate crude down 1.3%, $81.27 a barrel. Well, as for the overall earnings outlook and the market backdrop, Jimmy Lee is CEO at Wealth Consulting Group, and he was interviewed right here on Bloomberg Business Week.
Earnings so far has been really good across the board. I mean, of the companies that reported last week, I think 160, over 80% beat earnings with an average of 9.2%. That's actually from Bloomberg.
Skybridge Capital founder Anthony Scaramucci says investments in Bitcoin, tech, and other cryptocurrencies probably resulted in the best monthly returns ever for the hedge fund company. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Jess Metton, just in for Tim Stanovic, who is off today. And on the Bloomberg today, there's a story about how Google executives downplayed the company's artificial intelligence position during some testimony at a landmark federal antitrust trial, saying the company has tried to be slow and cautious because of the dangerous power of the technology. We, Jess, are definitely living in uncharted waters when it comes to generative AI and where it takes our world for better or worse. We're excited about chip companies and what they might make and what they might do. We just talked about AMD. But in terms of society, I think we're all trying to figure it out ultimately about what the impact will be.
And what the potential ramifications could be for users of this.
Well, we have a great guest. Martina Larkin is the CEO of Project Liberty. It's an international nonprofit. They talk about working to create a new civic architecture for the digital world. So let's get to it. She is a former member of the World Economic Forum's Executive Committee and sits on several nonprofit boards, including one devoted to innovation and technology at the European Commission. She joins us on Zoom in London. Martina, welcome to Bloomberg Business Week and our Bloomberg community. For those who are listening and watching right now, tell us a little bit more about your group and the mission that you are on.
Hi, great to be here. Thank you for having me. Yes, as you said, we're building a safer, healthier internet, and really believe that this should be designed and governed for the common good, for society, and not just for profit. I think even in that recent lawsuit that we've seen, these tech companies really having more of a motive around profit rather than the benefit of society. So we believe it's very important to refocus basically on the individuals and on society and look at what we can do better when it comes to social media, but now also AI, obviously. And we've seen all the problems that it has created, whether it's the mental health crises or political polarization, the decline in trust in media and in our institutions. So we want to take steps and build solutions that solve for that and create a better internet, which is possible.
And to be fair, there's a bunch of lawsuits going on. I think the lawsuit you mentioned is the one by California, the state of California, and more than 30 state attorney generals against Meta platforms, right, for allegedly enticing children onto Instagram and Facebook with addictive features. So that's going on. I'm assuming that's the case you were talking about.
Correct, yes.
How exactly are you building this?
So there's a number of factors here that we're considering. One is the technology itself, right? We want to build safer, healthier technology, more responsible technology. And we have developed a decentralized protocol that allows us to retain control of our data and change the nature of both the internet and social media by changing the business model, which lies at the bottom of all of that. And the fact that those big companies own our data and use it against us, and particularly those who are vulnerable, children and others, lies very much at the heart of that. But it goes beyond that. So the technology is obviously one aspect, but we also need regulation to solve for this, contributing to some of the safeguards and guardrails around this. And of course, the research and the governance is equally important. And then we strongly believe that we need to get people and organizations involved. So we have built a global alliance for responsible tech with organizations from around the world who want to contribute to this mission as well.
There's a lot out there, as you well know, the ad model, right? The acquisition of a lot of personal information, the dossiers that have been built on each and every one of us. That's pretty powerful, and it's very profitable for these companies. There's also regulating information and misinformation, but then we get into, are we kind of limiting kind of the right to speech? So if you had to pick one target that you would love to change, what would it be, and how do we do it?
Well, I think we have a real obligation to protect children first and foremost. Mm-hmm. And I think we need to put forward stronger legal protections for children online. I think that's just the basics. And then Americans, agree with that. The polls show that 70% of Americans and about 91% of parents want that as well. And they want stronger protections of their children online. But we also need to require more transparency, and we need to transform the industry with a new set of expectations around what is happening with the data, what kind of models lie behind this, what are the business models behind it, what is happening to the data. And this has become even more apparent with AI, that these organizations don't even know where the data is coming from and what is happening to it. And so those two factors, I think, are really important, but also, of course, building this new tech ecosystem, building these new technologies that actually, give us new hope and sort of a way forward, where we just don't even have to look at the regulation, but we can just use the new technologies that enable that kind of environment to become a reality.
What's the timetable on those types of new technologies when you do have things like AI constantly changing?
Yeah, so on social media, we have this decentralized protocol right now live. So we have MeWe, which is a social media platform in the US that is using that decentralized protocol right now. So it's here and now. We just need to accelerate it and get more people on it and more people demanding it. And that's the first step. And then this will help transform where we're going.
Martina, what do you think is the biggest obstacle? I feel like we are looking over towards the European area in terms of a bigger fight when it comes to privacy issues. And I feel like those in the U.S. are kind of watching what's going on overseas. What is the obstacle to getting it done? Is it lobbying? Certainly in the U.S., is it lobbying and money? Or what is it that you think prevents like age verification when it comes to something that would probably make it a lot safer for kids, or at least we could kind of police it a little bit more? Just got about 40 seconds left.
So one point certainly is that people don't know that there's options, right? From a tech perspective, they don't even know that can have different, doesn't have to be like that, right? The tech can be designed differently. And the second one is just individuals and organizations need to demand greater transparency and push forward regulation like COSA, for example, in the US. That can be something that just is a first step towards building this much healthier ecosystem that we're talking about.
And I'm sorry, what was that, COSA? Children's Online.
COSA, yes.
What does that stand for?
Yes, the children's privacy bill, basically, which was introduced this year in the U.S.
All right, so appreciate it. I feel like this is a longer conversation, and hopefully we can catch up with you again. And curious too, as you see maybe some progress, to check back in with us. Martina Larkin, she's Chief Executive Officer of Project Liberty, joining us on Zoom from London. If you missed any of it, be sure to check out our podcast feed a little bit later on. Carol Masser, along with Jess Menton, in for Tim Stanovic. This is Bloomberg.
company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Big day for Pinterest. The stock was up 19% today, biggest intraday rise since August of 2022 after the social networking company reported third quarter results that beat expectations. Analysts are positive about the company's revenue growth rate and expanding margins. Again, Pinterest shares up 19% today. Amgen dropped 2.8% after raising its full-year revenue guidance and closing the purchase of rare disease drug maker Horizon Therapeutics earlier this month. And with more on the quarter at Amgen, here's Bloomberg's Steve Rappaport.
Charlie, Amgen says revenue will be $28 billion to $28.4 billion for 2023. That's up from the company's previous projection that topped out at $27.4 billion. Adjusted earnings will be $18.20 to $18.80 a share, an increase of 40 cents at the bottom end of the range. Amgen said third quarter adjusted earnings were $4.96 a share, while analysts had estimated $4.68 a share. Analysts at Jefferies and Wells Fargo attribute the profit beat to lower expenses in the quarter. As part of its quarterly earnings report, Amgen disclosed it halted the development of an experimental prostate cancer treatment known as AMG 340 that was in the first stage of drug development. Charlie?
And that's Steve Rappaport. Amgen shares today down 2.8%. Sources tell Bloomberg Cytokinetics, a late-stage biotech firm developing cardiovascular treatments, is exploring options after receiving takeover interest. The stock today up 8.6%. And those are some of our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
And a headline crossing to WeWork planning to file for bankruptcy as early as next week, coming from the Journal, the stock dropping in the after hours. Let's get back to world and national news, though, and that we head over to Nancy Lyons. She's in our DC newsroom. Hey, Nance.
Thanks, Carol. The Defense Department says it will be sending another 300 U.S. service members to the Middle East to support ongoing operations there. Pentagon spokesman Brigadier General Pat Ryder says the troops will not be going to Israel.
These additional troops will provide capabilities in explosive ordnance disposal, communications, and other support enablers for forces already in the region.
Ryder also says the U.S. continues to coordinate closely with the Israelis to secure the release of the hostages held by Hamas, including American citizens. Hamas says foreign hostages will likely be released in the next few days. Secretary of State Antony Blinken and Defense Secretary Lloyd Austin are defending the Biden administration's $106 billion emergency funding request for Israel and Ukraine. They've been testifying today before the Senate Appropriations Committee.
Ceasefire now!
Lincoln's opening statement was interrupted several times by the shouts of pro-Palestinian demonstrators, which he acknowledged.
I also hear very much the passions expressed in this room and outside this room. All of us are committed to the protection of civilian life. All of us know the suffering that is taking place. All of us are determined to see it end.
The extra spending, which also includes humanitarian aid for Gaza, has the strong support of Democrat Patty Murray, who chairs the committee, and Republican Susan Collins, the vice chair. In Washington, Irv Chapman, Bloomberg Radio.
President Biden is taking another step toward eradicating junk fees, this time targeting fees associated with retirement planning.
Some advisors and brokers steer their clients towards certain investments, not because of the best interest of the client, because it means the best payout for the broker.
Biden says the new rule would close loopholes and target fees charged for rolling over 401k plans to IRAs. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. Now back to you, Carol and Jess.
All right, Nance, thank you so much. We bring you news throughout the day here on Bloomberg Radio, but now you can get the latest news on demand whenever you want it. Subscribe to Bloomberg News Now to get the latest headlines at the click of a button. Get informed on your schedule. You can listen and subscribe to Bloomberg News Now on the Bloomberg Business app, Bloomberg.com, plus Apple, Spotify, and anywhere else that you get your podcast. Hey, just in the next hour, we're going to talk a little bit about real estate in a couple different forms, if you will.
In a story that crossed the terminal, Wall Street law firms lift NYC real estate with return to office. I know this is always a hot topic, especially with hybrid work. And looking at this, so law firms are taking a lead role in filling New York City's all too empty office buildings thanks to an insistence that attorneys must stop working from home there. So looking at what's happening in that space, especially with law firms,
Yeah, it's kind of interesting, right? So the majority of big law firms requiring 3 or 4 days in the office, and law firms and finance represent more than half of leasing in the past quarter. So it's interesting to see as we figure out working from home and empty office buildings, whether or not law firms can kind of give a boost and some juice to the New York City real estate in particular.
And looking at some data in this story, Manhattan leasing fell more than 30% in the third quarter compared with the same period a year ago, and the annual office leasing total is on track to fall short of last year's results. So it's interesting seeing kind of where we've come and still the pressures there, given what happened in the aftermath of the pandemic.
Yeah, most top New York law firms now directing lawyers to be back in the office, as we said, 3 days a week at least. Little numbers, you shared some. Forgive me if I'm repeating. Manhattan leasing down 31% in the third quarter compared with the same period a year ago. According to Seville's, they track this stuff. Annual office leasing total is on track to fall short of 2022's result, according to the firm. But I think it's interesting what Joe Doe said about Caterpillar, that folks, a lot of what we're doing is getting back to normal. Pandemic distorted so much.
And what happens when it comes to office REITs in the equation of the broader real estate market, and how that percentage is actually a bit less than when you're looking at, say, hotel REITs and other of its counterparts there. So it's interesting to see how all of this ends up playing out, Carol.
Yeah, working from home, everybody was like, yeah, flexibility. And now I'm hearing, yeah, more back in the office.
Right.
We're definitely seeing it. All right, don't go anywhere. More to come right here on Bloomberg Business Week. Jess Metten and Carol Master. This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
Hi, everyone. Bloomberg Business Week continuing on this Halloween Tuesday, live in our Bloomberg Interactive Broker Studio. We are on YouTube and, of course, Bloomberg Originals. I'm Carol Massar. Tim Stenivek is off today. He's out trick-or-treating, but in his place, we've got Jess Metten right here in our studio. And we've got a couple of real estate interviews coming up, and then a little bit of a horror movie thing.
Margaret McKnight, head of real estate portfolio solutions at Stepstone, is actually going to be stopping by on opportunities for investors specializing in real estate recapitalizations, Carol.
Looking forward to that. And then speaking of real estate, Fort Myers Beach, you remember it, destroyed by Hurricane Ian's winds and flooding, just devastating. Well, it's being remade by those who can afford to build stronger structures and face future storms. More on a form of climate-driven gentrification. I keep thinking about this. This is kind of a new thing, but it's definitely happening.
It's really a hot topic. And of course, it is Halloween, Carol.
It is. You wore orange. I did not.
I decided to go out with a bright color ahead of the fall, obviously going into Thanksgiving soon. But we are looking into the lucrative business of horror movies and how Hollywood has perfected the formula. That story in just a moment.
Yeah, the stats on this is just really impressive. First up, though, never scares us. Well, sometimes maybe. Let's get a check on the day's trading top business stories here. Charlie Pellet. No, never scares us.
Yeah, there you go. Here's what's going on. We've got the Dow, the S&P, NASDAQ all advancing today. We're keeping an eye on shares of advanced micro devices after ours. AMD, of course, Intel's main rival in computer processors. The stock right now down 4.3%. It delivered a lackluster revenue forecast for the current period, warning that demand for gaming machines is slowing again after ours. AMD trading lower now by just about 4.3%. It was an update, as I mentioned, with the Dow, the S&P, and NASDAQ all ending the month on a high note. A losing month for the U.S. stock market, however, and it is on to the trading month of November. S&P today up 27, a gain of 0.6%. Dow Industrials up 123, up by about 0.4%. NASDAQ up 61, higher by 0.5%. 10-year yield right now, looking at a yield of 4.93%, with that 2-year 5.08%. Spot gold today up 29 cents, 19.84 the ounce, while West Texas Intermediate crude was down 1.6%, 81.202 a barrel on WTI. As for the overall market backdrop, Aaron Brown is portfolio manager at PIMCO.
Right now, stocks are competing against a yield-rich environment on the fixed income side, which is, yielding you, north of 5% on cash. And so that's a difficult environment for equity investors as a starting point.
And you can hear more of that conversation on the Surveillance Podcast. You can download it wherever you get your podcasts. Tesla convinced a jury that its autopilot technology was not responsible for a crash that killed a California driver 4 years ago. Today, Tesla shares did advance by 1.8%, Lucid up 1.2%, Rivian up by 3.2%. Again, recapping after hours, AMD down 4.5%, stocks higher, S&P up 27, up 0.7. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
It is Halloween. Think scary, and that theme song from the Halloween movie franchise may come to mind. I'm locking the doors. Happy Halloween, everyone. 'Tis the season for spooky movies. And did you know that of the top 20 most profitable films based on return of investments, ROI, since 1977, 9 are actually horror movies, according to movie data analytics firms, the numbers. Looking into this lucrative business of horror movies and how Hollywood just seems to just get it so right is Bloomberg News media and entertainment reporter Samantha Stewart. Sam joining us along with the editor of Bloomberg Business Week, Joel Weber, both here in our Bloomberg Interactive Broker studio. Sam's story already online at Bloomberg.com/businessweek, and of course on the Bloomberg. Oh my God, ROI, big time.
Pretty good, right? I feel like we did this story just so I could ask this question, which is,
set up.
Do you like scary movies? Like, oh man. So
Who
good,
doesn't
right?
like to get the heart moving?
Scream dates me, but okay. I have a
Sorry, I missed
soft
that
spot
one.
for, I have a soft spot for these scary movies. I think many of us like to be scared.
Do you really love them?
Yeah, but I get scared. Okay. I was an 8-year-old. He can hear like the key change, and he's just like, "I'm out of here." He's definitely not watching any of the movies that we're writing about here. What fascinated me about this, and why we tapped Samantha for it, this is a money-making formula, and Hollywood has found it and almost perfected it. And it's like the thing I like about it is like how little money can you spend to have a nice ROI. And some of these movies become franchises, and they just have become this ongoing little geyser of money. And it's like, if you want the shortcut to like how to make it in Hollywood, I think you're looking at it. It's about scary movies. Samantha, help us out here. When you started this, what did you learn along the way?
I mean, it was really interesting just to see how profitable these scary movies are. I mean, looking at Paranormal Activity, especially, its initial budget was only $15,000, and then
$15,000.
That's crazy.
Yes.
That's crazy.
Yeah, only $15,000, and then went on to gross over $194 million worldwide. So that's a really big bang for your buck, I would say.
A really big bang. That's like off the
like
charts.
I said, how little money can you spend in order to like. And that's just the first movie. How many did they make? It was like, there's more than 2 sequels.
Sequels, right.
Yeah.
So why are they so cheap and fast to make?
I mean, a lot of the time they don't have to spend as much money on A-class type of artists, and actors, because they're a lot cheaper to kind of pay for these lower budget actors. And then you can also really, spend less on sets and like CGI and all that kind of stuff. You don't require the same kind of things that maybe a Marvel film needs to be made. You can do a lot of this on a lower budget. I mean, even Paranormal Activity, the first time filmmaker Oren Peli made it in his house, actually.
That's what's crazy, right? We've all gotten so spy. Like, did you ever go back and watch like the first Star Wars, and you're like, no special effects there? like we've all gotten so used to like we want to be entertained with all these special effects. That's not what they do. Mm-hmm. They just scare the heck out of us.
Yeah.
Well, isn't it true though that special effects can be gory? They can do things that fills in your imagination. For $15,000, your imagination will terrify you. And I think that is also part of the formula here, too, is like, don't spend the money on doing all the CGI stuff. Just let your brain fill in the gaps, and your brain's going to do the work. So who in Hollywood does this better than anybody?
I think Blumhouse has really kind of perfected that recipe. I mean, they've went on to gross already $5.7 billion for all the films that they've produced. And I mean, look at Five Nights at Freddy's, which had just an absolutely stellar debut with $80 million. I actually have not yet, which is crazy.
I will say the art and the story for it makes me a little terrified.
No, the animatronics are definitely scary, especially.
Well, that was the thing is, like, animatronics have always terrified me, but nobody made a movie out of it.
Yeah,
now I definitely am scared.
And they're the production company for Paranormal Activity?
Yes, Paranormal Activity was kind of their breakout film, which really helped them kind of perfect and refine that low-budget model that generates this huge ROI.
Well, talk to us about Jason Blum.
Oh, well, Jason Blum, I mean...
who I'm kind of obsessed with. He just did like a Shark Tank that did the Halloween version, and he came on and, you know, pointed out like how well he has done and how, in terms of top grossing movies, like he just has a ton, like one after another.
Mm-hmm. No, I mean, I really think it's kind of honing into that whole lower budget idea, and again, kind of doing away with a lot of the things that these bigger budget films that Hollywood are known for often find to be kind of integral, and it's taking these kind of more original ideas and just going off of those and being able to make these movies that have these huge payoffs.
Okay, so we've talked about the really cheap ones. We've talked about the most noteworthy director, Jason Blum. We haven't talked about The Conjuring.
Mm-hmm. Oh, yes. That's the biggest franchise, actually, which was made by Atomic Monster, which was founded by James Wan. So he created the whole Conjuring franchise. And I mean, by now, there's about 8 films, and it's grossed over $2 billion at the box office, which is insane.
So what was amazing about that one? Again, it started with like a modest beginning,
right?
And then you start ratcheting up the money, but like they did that first one in like 38 days. So like,
that's what's remarkable.
I mean, like, and that
on
takes
a single
me back
college
to,
campus.
Yeah, and like Blair Witch, same thing. Like that was the one for me, like where I was like, it just showed how you can nail this genre and do it so well and just scare the bejesus out of people.
Right, and everybody was talking about it.
Yeah, I mean,
and that was like, if Jace me again. Slightly pre-internet.
Everybody, you know? Joe Weber's a little obsessed with this genre.
Could you tell? Okay, so which ones surprised you that didn't kind of like rise above?
That didn't rise above?
Yeah, like that didn't break through. Like when you, I mean, part of the metrics that we're looking at here are ones that were like, you know, box office success. Midsommar probably not a huge moneymaker, but like also a great example of this genre. So like, if you don't have the money, if you don't like, there's still this cult thing that can happen, right? And like, The Witch was another one that was really good in this regard, where it had like really high, kind of like film allure, I guess, right? So like, what are the dynamics that, you know, that don't always just need money to succeed, right?
I mean, I think that what's really interesting about these films is that they're able to generate this huge ROI, even though they don't always get the best reviews from critics. I mean, a lot of these films aren't that well received.
Well said.
It's a given. A lot of these films aren't that well received, and I mean, one researcher found that actually the horror genre has the lowest correlation between box office performance and its critical reception, which I thought was really interesting. I mean, you look at the ratings for some of like the highest grossing films this year, and they're not that impressive.
Yeah.
So, yeah.
I also thought it was interesting, and I kind of felt this, okay, I'm going in a completely, you know, different direction, don't judge me, but Barbie, like I felt like for the first time, like I was back in a theater, and it was kind of a group experience. We were all kind of laughing and like kind of, you know, or whatever,